Hey everyone, it's the Coco Nomad here, and I am back on this channel where I talk about location and financial independence with another of the videos on the financial independence side. And this is another monthly investment report. And this one is for the month of January. So the first month of the year. Had some interesting things happen during the year as I continue to grow and learn about trading. So if you're interested in this, go ahead and click that subscribe button. And while you're down there, smash that like, and you'll be up to date and be notified when I post new videos on investing or travel and these types of things. So let's go ahead and dive in and just see, hey, how did this month go? So just to kind of introduce anyone who's new to this series or new to this channel, I am using this as a strategy to reach financial independence. I have a goal of achieving Coast Fire in 3 years and complete financial independence in 10 years. And this is my fourth full month of investing. So I kind of like to think that that first semester is over. Being a freshman and just like really taking it on the chin and learning some lessons, learning a lot of new things. It was super exciting though. And paid a lot of market tuition. And this is sort of like the first month in the new semester and just sort of like trying to take what I've learned and grow and see if I can apply that and improve my investing, improve my knowledge, and improve my performance. Because there's a lot of things that go into this, right? It's not just learning the technical ins and outs or how to read charts or how to reading financial statements, but some of just like your own emotion and learning about yourself, learning about like the risk profile that makes sense for you, the types of things you want to invest in, how you react to when the market is moving up, how you react when the market is moving down. It's very revealing. And I think this is an activity that maybe you don't have as much money in the market, but it's a great way to sort of explore and learn some of those types of things. And over the long haul, I personally think it will be financially beneficial. Otherwise, I wouldn't be doing it. So my strategy is actually evolving as well. So if you follow me and watch some of the earlier videos, you'll know that here I talk about receiving both dividend income on a monthly basis and premium via the options trading using the wheel strategy, where I would sell covered calls and sell cash secured puts and receive that premium. That strategy has evolved. As I mentioned in a previous video, I am no longer using this particular trading account for the dividend side. That is moving to a different account so that I can just focus over there. So each account will have its own purpose. This Robinhood account is strictly for options trading, and that's it. Now in the future, so far I've only really sold options to generate premiums, but I made a mistake this month and kind of by accident introduced myself to the buying side. And I'll talk about that in just a bit, but I just want to review the targets and get into some of the results. I like to track my targets every month. So I had this little chart that I made with these different increments, different levels, and the amount of premium and dividend. Well, now it's just going to be just premium on a monthly basis and where I am each month in the level. And so you can see here, you can create your own if you're doing your own investment, and it doesn't have to be the same increments. The numbers don't have to go as high. It doesn't really matter. It's more about just having a way to sort of track, just creating some levels like a video game, right? You just know you're just kind of leveling up and getting better, but you can make the levels go as high. You can have more levels. You could have different amounts at the levels, whatever suits you. It's just for me a good guidepost. So I know it's like, hey, I can look and say I was at level 6 this month, at 7, or I'm down to 5 or whatever. So that's it. So let's dive into the results and just see how I did in the month of January. And so primarily with the dividends, and this is the last month of dividends in this account. Well, there might be, if I happen to hold something at an dividend expiration date, ex-dividend date, then maybe I'd get some, but I'm not looking for it anymore, like where I was planning. And this final month, I did hit $40.73 in dividends, which is really good. Again, certain companies pay dividends on a quarterly basis. Some pay on a monthly basis. A lot of them really pay on a quarterly. So I had a few more that I own that just happened to pay in the month of January. So they start the year paying those dividends. So it was pretty good. And then on the premium side, my premium generated went back up to $34.74 in premium generated. So although that number's got a little bit of, seems like there's a lot of volatility that I've reduced in the underlyings, some of the underlying stocks are still paying higher premiums, even though they're not as volatile, and I've kind of transitioned out of them as much as I can, as I still have some that are I'm just holding long term or longer term because they've dipped so low, and I've got to kind of take my time and recoup the money back via premiums on a monthly basis. Now, if the premiums dip where I can't get monthly premium, then I have to look at possibly just selling and taking a loss. But I haven't had to do that yet, thankfully. It's just paper. They're paper losses. They're down on paper, but not actual realized losses in that regard. So my goal was to return to level 8. I thought that with the amount of money that I deposited and the portfolio value, that I should be able to generate above like 2,500 or above, which is the level 8, and I was able to achieve that. As you can see, that total is 3,309. And I didn't think about this before, but someone probably would look at that if you look at this before and say, wait a minute, those numbers don't add up. And that's because I do have to subtract my fees. So I pay for Robinhood Gold, which is $5 a month. And occasionally I go into margin, although not a lot. And that is like a 2.5% charge per month for the amount of margin that you use. And that was 73 cents for the month of January. So total of $5.73 that I had to pay in the account trading, either for access to gold and for the access to the margin, which I really try not to use a lot of. I watch that like a hawk, but sometimes I might have a trade that I put on that puts me into using some of the margin. And I've never had it go over, I think, $1 in a month, because I'm just like, I'll either deposit more money or I'll sell some underlying to get me back under that requirement. I'm not a fan of using margin, although there are some people out here that are far more advanced that use it and they're able to leverage it for far more gains. I'm not at that level. I know where I am in this game. I know what I know. I know a lot of what I don't know, and I'm not willing to sort of put the portfolio at risk more than I have already by taking some early shots in the arenas that I have. The next section is that what does it pay for? And this is ideally if I were to pull all the money out and was able to not affect the portfolio and still just generate income as a source, which I'm not doing yet because portfolio is just not there yet. Hopefully I'll get there at some point. But this month, what would it pay for? The 3,309 would actually pay for something I'm doing later this year. For my birthday in September, I will be doing a train trip from Moscow to Mongolia for a couple of weeks. I'm really excited about it. It was a trip that I tried to do in 2020, but of course, with the pandemic, all the travel was just canceled. So I and a couple of friends, we're going to do this year, and hopefully we can make this happen this time. We're gung-ho, super excited about it. And the official price is a little bit less than this, but I figure, with food and assortment of, maybe I'll pick up some trinkets and stuff along the way. It'll probably be about $3,300 total to pay for everything. So that is nice to know. Hopefully by that time in September this year, my portfolio will return to its proper value, where I think it should be, or maybe even higher. And I will be able to start just extracting the money. Although I probably still won't, honestly. I'll probably just sort of like do almost like the dividend reinvestment. I'll just leave it in and just continue to just allow that account to grow. And then I can just focus on putting my extra money savings every month into the dividend account or some other investment pool, like for instance, the long-term real estate purposes, putting something towards that. So I don't want to continue to fund this account every single month. I want to get it to a certain amount, and then that's it, and just sort of cut it off and just maintain. And as we look at the portfolio, you can see the underlying, again, January had some dips, the market had some big drops. And this portfolio, even as I've moved out of some of the riskier stuff, it's still the market as a whole. It really didn't matter whether if you're in Google or Apple or whatever, you're still people experiencing that dip. So you can see that reflected here, where my portfolio value is down, even with the deposit that you see here, the 4,000 going in, but the portfolio still ended up taking a dive. And the lesson I just want to say this, you do have to just manage the downturn. You just have to weather that storm. There's no, again, just no predicting. You can't really predict the market or time the market or do anything like that, which is why I use a premium as a metric. And while it's not everything, as I've stated in previous video, but it still is the main metric that I use, because the interesting thing is, even though my portfolio value isn't going up, and it's actually has gone down a little bit, I'm still able to generate the same amount of monthly premium. So to me, that's a little comforting, right? Because it's super, knowing that, okay, the market is down, but my strategy still generates the same amount of income. Now it's seeming to tread water now because on paper there's some losses, but I know that won't be the case over the long term. So it's a little comfort in that as well. So just kind of managing and weathering the storm and not sort of getting swayed away from my strategy. Not from fear. Changing strategy when I look at things and analyze and say, okay, I want to try something different. That's one thing. But there's kind of panic and say, oh, I don't want to do this anymore. I'm out. I don't think that's a good way to go, because you'll always be constantly just moving to and fro as the market moves. And you want to have a steady strategy and change it with sort of conviction and have some evidence to support why you're changing it, and really be intentional about changing, not just reactionary. So what does that mean for me moving forward and what's next? And really, as a part of this crazy thing that happened, I'm actually setting the buy side of options. I kind of fell into it by accident. So to tell the whole story, Robinhood actually is publicly traded now. They went public last year, and their stock had, since the IPO, it's just been going down, and it hit a super low point after the most recent earnings call. And I just felt like looking at it was that it was too low. I was like, oh, people are overreacting here. So I was like, let me get in here. I think this is a good point. I'm not a big buy the dip person, because you never know what a dip is. But I think if you dollar cost average and you believe in the stock long term, or, then I think you can be okay with that strategy, because your average cost keeps going down. And that's why I like to use a premium too, to sort of lower my cost basis on the underlying stocks. Well, in this particular case, it went down to under $10 overnight. And so I just went up the next morning. I set a price where I was willing to buy it. So I bought 300 shares. Now, this wasn't an option. I just bought 300 shares, and I was going to sell the covered calls against that as it, went up, or just sold a higher strike price. And then I thought I had put in an order to sell those covered calls, but accidentally kept buy set. And I ended up buying contracts on that for that strike price. And so my plan was, I think this will generate about $295 was about where with that option price sat that I would make. And that didn't happen. What actually happened is the price still went up like I thought it would, because I thought people were overreacting. But I didn't own 300 shares and selling covered calls against it. I actually owned 300 shares and the option to buy 300 more shares by the end of that day. Because this was like a one-day play. I don't typically do day trading at all. But I thought for this particular thing, I'll just do, at the end of the day, I'll be in and out. And ended up exercising the options on those 300 that I bought and the ones that I bought options on, and ended up being almost an $1,100 trading day, which was just, for me, amazing. Best trading day I've had so far. Really, and this was, the end of the month, like literally the last trading day of the month. So it was a really cool way to end the month. Just super positive. So for me, in addition to just studying that strategy purposefully, going in, because it was the same idea going in, but I never thought about buying options because I've just heard so many horror stories about buying. So I just stayed away from it and only sold for premium. But I'm beginning to realize as I learn more that maybe, you can mix that in to the strategy and not just do the wheel. And then the other second thing that's next is just finding optimal expiration. So I'm actually writing a piece of software to track my trades, but also help me analyze those trades and make better decisions. I've been using spreadsheets, but the spreadsheets don't really present the information a lot of times in the way that I need. And there's some pieces of information missing. And, I develop software by trade. So it's like, I'll just make a tool. There doesn't seem to be anything out here. So I'm working on finding optimal expirations, because I've done monthlies and then I've switched to strategy just to focus on weeklies. And I'm like, maybe those two aren't the best. Maybe there's a place in between that's like an optimal place in which to sell with a days to expiration that would work out better long-term. I can maximize the premium while still minimizing the risk and getting the most out of those returns. And then finally, just maintaining level 8. I don't think that's something I want to get away from for a long time now, probably into maybe even halfway through this year before I even look at like moving up to like level 9, but maybe even finishing the year just consistently at level 8, but also maintaining that portfolio. Maybe the portfolio comes back. We'll see what happens there. Can't predict that part, but just looking at trades and try to set my strategy. Like, this is my target. This is how many trades I'm doing. And if I can generate, you know, $2,500 a month, then that's amazing. It's awesome. Like, that's the direction I would like my life to go in, but also being able to pull that out at some point as a source of actual like revenue that goes into some other things. So we'll see. That concludes this month. Thanks again, as always, for watching, supporting the channel. And if you have any questions or comments, please post them below. I'd love to hear them. Some people do reach out, and it's great because I learned some new things and just some encouragement as well. Both ways, you know, people encouraging me and me giving encouragement to other people to just learn and grow and see, you know, what you can learn, what fits you, and how things work. As always, hope you have an amazing week, and I will talk to you next time. Cheers.